Oh my goodness. Yeah. Sorry about that, guys. They're saying no sound. I was muted. I've been muted, so sorry about that. And I actually just noticed Amanda copying her over. So yeah, thanks. So have to go back over that, and so we'll kind of touch on this real quickly. Um, let's just go on and go back into the euro dollar. So as I was stating here, and apologies, didn't even realize that we were looking. We had laid out the levels for the week, as we do on Monday. We usually don't have our resistance and support is tightened up so much. So we had 1848. That was the key level going forward, and you can see right here we're coming up with 1848 right there. We did go in and move the support down from, I think was it 1737 or whatever. We've moved it up to 1771, thinking on this move, if they're still going to make a move up in here and trying to push towards that 1848, this is now that they've, neither way we could have broke, Monday, the key level above was 1848, below 1737. Well, now we've made a push higher. We've got adding on to a little bit of momentum. So this should be key to hold, which is going to be this 1771. Moving on to the cable. We decided to go in and keep 3809. We said it was fairly quiet start, a little bit firmer. We're not expecting any major surprises. We're going to keep 3809 from yesterday, which is key. And we also decided to go and keep 3728 because we haven't pushed much on the upside. Maybe we do pull back. And in case we do slide back on a surprise, we dip back, then we're looking for 3728 if we do get that. Which would come in right there. If we would turn around, that would come in for support. Moving into the Aussie dollar, we did get that move higher. We had 73.32. This is pretty key level here. Could we push higher? Maybe, but this has been pretty firm down here, and we've had a pretty good run off the bottom, so I'm not expecting a whole lot beyond that. And we decided to keep the 72.59. Moving on to the dollar yen. We talked about this market really going nowhere. And we had 1022 pretty much all week long as our bias chart resistance. We got to it exactly on Thursday. And we had that 1022, I think, since Tuesday of last week, if I remember correctly. And we got to the pip. Then on Friday, we got to 1027. And then we finally rolled back downhill. And so we're going to keep that. But on the downside, we're also going to keep this 965, 944 because it's trading so very tight. Moving into the cash dollar index. We talked about the bearish engulfing bar that we had since yesterday, which opened the door for us to move lower. Actually, bearish engulfing bar on Friday opened the door for us to move lower. We traded rather quietly. Once again, may have been impacted by the UK bank holiday, but we're opening the door and move lower. I still like this area for our initial support. Potentially on this, we could break all the way down to, I think it's 92.03, but initial support was going to be this 92.32, and then resistance is going to remain here. Doesn't look like we'll get there, but would be 93.02. Moving on to the Bitcoin. We had 47,500 as our bias chart support yesterday. It did go down there and hit it. We moved this down to that key area of 46,412. We're just kind of stagnant to a certain extent after last week. We got that, which we covered this doji, which we thought the market may stagnate and just kind of drift a little bit lower. Our initial support was 47,500, which we did hit pretty much to the T, you see here. And then today we're pushing a little bit lower. We haven't come down to 46,412, but that's our support. Resistance is going to be 48,171. Moving on now to the S&Ps. We've actually come all the way up in here. We had 45.45 as our bias chart resistance. We've made it up to 45.43, but or 45.42 and 3/4. But one person has had this level in mind for some time. I never thought we'd get there, but they had 45.43, so 45.42 and 3/4, about as close as you can get. So I just don't know. Like I said, it is end of the month, so maybe we can keep the juice going. But boy, we have come so far, so fast. Kind of curious whether we can sustain a further move. But what a heck of a run. I'm going to keep this 45.45 there. We'll see what happens, but stay with that 45.45. And then on the downside, certainly this, I mean, it's just, man, this is truly going like, you're going down the highway and you're just going by mile markers. And so the next key support is really not till 45.03. I guess you could make something to be right there. $45.10. Because this market could easily just pull back. There's nothing necessarily to show that, and I don't think we're going to try and see a dip on into the month. But wow, that's just unbelievable, these moves. Take a look at the Nasdaq. To me, I think the Nasdaq is being driven more by what's happening to the S&Ps. That being said, I would think that, but it's easy to say that. But when you take a look, new highs Apple. Look at Amazon. They've come back. Microsoft, still up in the heavens. Look at Google. Does look like we did have a for the day here, posted like a gravestone doji. Nvidia, we haven't looked at these for a while, but look at this. Facebook, wow, look at that, new all-time highs. Netflix, new all-time highs. Intel, even that came off the bottom. Tesla, new all-time highs. I mean, so to me, when I look at this, I would say, oh, the Nasdaq is just being pulled along by S&P as of recent, like as of the last couple of days. But that's not necessarily the case when you look at the key stocks of Fangman. So I'm just have to go with 15,700. This is unbelievable the way the things moved. That would be, I mean, it's hard to believe it. That would be it right now. $15,567. Looking at gold, I've already, we were on mute. I had mentioned at the beginning of the show, I don't think anything's changed for gold. I just think that um, people really got zonked on this one. If you remember when we were also, I was going on a rant how I believed that this, we went in detail. We spent nearly 40 minutes one webinar, or a good portion of that, um, going over how this was, bulls couldn't get anything going. The market was technically weak. Even though we're up in here, they kept pushing it back down. And then we had this last push up in here that took us into the 30s. And then I remember discussing saying, look, in 1 2 hour bar, we gave up, more than $20. And then I remember that day we had 1802 as our support with the secondary at 1794. I thought, well, this thing can get down to 1770. Now, the ultimate we were taking was 40, but I didn't even mention that. But we had talked about 1740, but then the wheels came off the caboose on that Sunday evening. And since then, we kept going higher and holding here and then make another push here. Then we broke lower. I just think it'd be hard to try and get people bullish on the same again. I just don't see it. We're up in here, but once again, I said this yesterday, and look, we came up here and we just turned around and dropped $15. And we try to push up and still not get anything out of it. So just, I think that this market, for starters, would have to get above 1865. That's why I have this resistance at 1865. And I said everything in between that, from where we are to in between and 1865 is just meaningless, because that's what they did to them last time. So I think what we did was we stopped out a bunch of value bears, because after they saw this, thinking, oh, heck no, this is a good short. And we kept pushing lower. We couldn't get much lower. And then we stopped out some people. Oh, okay, look, you see how we're not going anywhere? And we did back down a few more stabs down here. And why we stopped them out here, I don't know, but we still haven't done anything of any real extent. So to me, any moves up in here, pretty much all meaningless. And I guess you could maybe make the case around 1848, but to me, the resistance comes at 1865. You could actually rally up in here, and then ultimately we might fall apart again. But I think it'd be a hard time trying to get people bullish on gold again, unless they're bullish from way back when, and they don't care about this. It's pretty hard not to care about a big move like that. Now they're making the case, well, there's a double bottom. If you look on a monthly chart, it does appear to be a go there. We did cover that yesterday. See right there? So you could say that there would be a hammer bottom, but it's still going to be tough, because you look how much they gave up 2 months prior. You see that? Then we kind of held there. So it'd be a pretty tough case to make to be bullish again on this. And same thing with the gold on the downside, 1794. Same thing. I just think that you can swing back and forth. So there's where you'll have some interest at 1794. If people are short, they may be covering. But other than that, I just don't see a whole lot with this. Take a look at crude oil. I talked about that, over the significance of the 69.55. That pretty much held to the T, even with IDA. And I would have liked to short it. I did not short there, but with Hurricane Ida, and all the manufacturing down there, refining, I'm thinking, who knows? Like, I'm not going to do something stupid and step in and short and then have this thing up my face. I'm thinking, no, I go with technicals, but when you get an overwhelming fundamental event, that can just kick fundamentals to the side. So we did dip back, and we made another run back up here towards the 16.955. We were above 69. We couldn't do anything with it. We did back, made another run back up in here, still nothing, and now we're starting to give back. Key level still remains at 67.95. So there's no changes here. 69.55, 67.95, no changes. And that's it. There's not anything that significant to look at on the profile than these numbers. Like like I said, with the crude oil 67.95, 69.55. I went into a lot of detail previously before on the significance of that, which I shared over the weekend, and why I thought that was going to be key. Gave a full breakdown. If you see the notes I posted on Twitter, had a gentleman asking me about that, and why I said watch 69.55. But I think we'll kind of hang around here. Maybe we'll start to pull back. We've had such a strong run here, and we tried to dip back initially. We pushed up. I think this was more about, and I said it's longs by default because of the hurricane coming in. Be pretty tough to make the case to just be short, but we couldn't get very much beyond the 69.55. I think we may have taken it out by a dime or 13 cents, and then pretty much quickly gave in and gave most of that back. Made another run up here, and we're rotating lower. And I guess right in here would not have been a bad idea. If you look here, coming across there, if you were tightening it up, you're right there, 69.18. But the door's open for us to come back down to 67.95. But once again, like I said, I wasn't interested. I had traded it several times last week, but I wasn't interested in doing anything with that hurricane. I didn't know something was going to come out from as far as what had been damaged, and all of a sudden, the next thing it jumps up a couple of dollars or something like that. So I'll stand aside, just let it do whatever. And you can see here we held, and we started to rotate lower. Next key level, 67.95, and if they break them lower, 67.11 is a very key area here. We actually visited it twice. This was a key level on the way up, 67.11, and then it was a very key level on the way down too. You can see now we're starting to break a little bit lower in here. That'll be it. Thanks for joining us here on the European crossover webinar, and we'll see you in the chat room.